Hi, Michael Glennon from Glennon Capital. And today we're going to talk about BHP. Yes, I know it's not in our universe, but it's interesting as a good case study for what happens in the resources market. And I guess what triggered this is, you know, there's classic things you see in the market that remind you of top of the cycle type things. I guess it's the feel-good ads that BHP is doing on the TV at the moment.
130 years ago, 7 men gathered in Broken Hill and dared to think big. The company they created was BHP, the big Australian. Imagine what we could all achieve if we continue to think big.
So what it generates for their business, I don't know. Just a feel-good thing and a bit of a waste of money. But if you look at BHP and their share price, it's trading at about the same level it was in 2005. So 10 years later, you know, we've got a share price of $25, same as it was 10 years ago. So what's happened in that time with the BHP business, though, it's significantly bigger. They've expanded a lot of their mines. They've spun off South 32 and it's producing a lot more output than what it was back in 2005. To give you an idea of the magnitude of what's happening in the iron ore market, in WA in 2005, there was 243 million tonnes of iron ore produced. In 2015, that had grown to 757 million tonnes, so it's significant expansion in production. Now, that's not all BHP's, but what's happened in that period of time, BHP's share price, as BHP's dividends have gone from 36 cents to they'll be about 39 cents this year, and they peaked during that period at the peak of the iron ore price when it was at its highs at about $1.67. So what's actually happened with BHP during that period of time, you've had a big increase in dividends. The dividends have dropped back down again. The share price is about the same. Production has increased significantly, and we've seen iron ore price come back quite dramatically, and it's firming up a little bit now. But the underlying theme that's there, and why I think that, you know, you may be seeing the end of the bull market of resources, is that this increase in cash on the balance sheet of BHP has been quite significant. So there's about $18 billion worth of cash on BHP's balance sheet now. And what's important is that the company's kept all of that money. They haven't paid it out to shareholders over that period of time. And as I mentioned, you know, the dividends are not that, for the amount of increase in production, the dividends are not that much more significant than what they were 10 years ago. So has it been a great investment over the last 10 years, and have you made a lot of money out of dividends? I'd argue that you haven't. And it's disturbing when you see the company spending money on feel-good things like advertising on primetime television while cash is building up. And the most worrying thing about some resource companies is they like to keep that big cash balance on the balance sheet. So in times when it's hard to raise money and that you're not in a boom market for commodities, they can use that money to fund exploration, which is something that if they keep funding the exploration and putting all the money back into the business gets bigger, but it may not mean that there's more returns for shareholders. So I think it's a disturbing trend. Do I think BHP is going to be a good investment? It's not something that we'll be looking at for our fund, one, because it's out of the universe, but secondly, I don't think it's been a great investment, nor do I think it's a great long-term business to own, and it's one of the reasons why we do shy away from investing in resource companies. So that's our views on BHP, not one that we're going to be investing in. For those people that have asked us about it over the period of time, that's our view on a lot of resource companies. They tend to get very big and the executives pay themselves a lot of money, cash is retained in the business, and not a lot comes out in terms of capital appreciation of the share price or significant dividends over that period of time. So the only way we'd be investing in something like BHP is if there was an indication from management that they were actually going to start to return some of that significant cash balances that they've got on the balance sheet. So I'm Michael Glennon, thanks for watching. If you want to find out more about what we do, please look at our videos on YouTube or go to our website. Thank you.